Hi, ladies and gentlemen. This is Mudaser with Caleb Williams. Today, I'm in office of Amris Bank with my friend Amin Jedi. He was a mortgage consultant. Um, I know Mr. Jedi since last over 5 years. He's very knowledgeable, very professional, and wonderful person. We have few questions every time when we meet new home buyers or potential buyers. They have questions about mortgage and mortgage related questions. So we'll keep bugging Mr. Amin time to time for these questions. And today we have 3 or 4 questions. We'll ask them and we'll go from there. The first question, Mr. Jedi, is which type of mortgage is best for me? A layman comes and asks this time. He's not sure what he's going to win. People are confused between FHA, conventional. What is the difference? So if we can, answer these 2 questions in one. What's the difference between FHA and conventional, and what
Absolutely. So what we do, we look at the whole package. We gather lots of information from you, your credit history, your income, how long you've been working with your employer, how long you've been in the same job position, what type of income do you have, self-employed or salary or hourly or part-time, and also the down payment, all of them. We look at them and then we make decision which one would benefit you to go with, either conventional, FHA, or other special loans that we do offer here. We call them portfolio loans. We do have bank statement advantage for self-employed. We do have special program for medical doctors that who just became doctor for up to 100% mortgage, and a lot more, which we can consult you, let you know, and then you make decision which one is better for you. The other question, what is the difference between conventional and FHA? FHA is a government loan that they brought this loan to help more people become homeowners. So obviously some factors are easier than conventional. Conventional is from private companies like Fannie Mae or Freddie Mac, who are setting those guidelines and then selling and buying those loans on a back end. So there's one factor very important. We looked at it. We call it DTI, or debt to income ratio. On the conventional, it's the percentage lower than FHA. So basically, comparing these two, your buying power on FHA might be more than conventional, but it's not same for every person. It depends on how much debt do you have, and then how is your income. The other factor is the mortgage insurance. If you have lower than 20% down payment, you're gonna have mortgage insurance that you're gonna pay it monthly towards your monthly payment that you're gonna have it. Usually the rate on a conventional is lower than FHA loan. Again, it's can be different for different situation, but the main difference is on conventional loan, when your loan to value is lower than 78%, it's gonna drop automatically. When it becomes 80%, you can call your servicer and ask them to drop it. But in FHA loan, it stays with the whole term of the loan, which is 15, 20, or 30 years. These are the main difference. Something else is down payment. FHA requires at least 3.5%. Conventional for first-time home buyers as low as 3%, if not as low as 5%.
Very good. Thank you very much for the brief answer. There's another question related to this is this: do I qualify for any down payment assistance program?
Great. That's a great question. So I mentioned that about first-time home buyers. Down payment assistance programs are for first-time home buyers. Any state agencies offering those down payment assistance in Virginia and Maryland, we do work for both. Who is first-time home buyer first? First-time home buyers, obviously, who are never owned a house before, is the first time they're buying a house, or those borrowers, people that last 3 years never did not own a house. For example, 4 years ago they own a house, sold it, and then last 3 years did not own. They're gonna count as a first-time home buyer as well.
Very good. Thank you very much once again. So good question, good answer. uh, and people ask me, are you doing a hard credit check on me today? People have concern about the credit check. They ask about will it reduce my credit score, and if how it will affect my home buying capability or interest rate, and how many times you do credit check when customer come to.
Absolutely. So, as I mentioned, we need to see your credit history. So, we have to run your credit, and that's going to be a hard inquiry. If you do one hard inquiry here with us for the mortgage, we don't need it up to 120 days to run your credit.
Okay.
So if we issue a lender letter is good for the time, 120 days, and then for the mortgage, we have to see all three scores. So all three bureaus, we have to run them, and then we go with the middle one. Some other banks, they have three different individual inquiries that shows on your history. Of us, we do have advantage of doing the merge, which is going to show one inquiry on your history, and then again, we don't need it up to 120 days.
All right, that's wonderful. Thank you very much. And also, when you qualify a buyer for certain, based on their income and credit score, a certain percentage of the loan amount, do you also tell them at that point what would be their interest rate or APR and how good that would be for?
We definitely talk about it, but that's not the exact interest rate. They're gonna be the loan interest rate, because interest rate can change sometimes twice a day, getting better or worse. So what we do, we talk about it during the time of the process. As soon as you have ratified contract and then the address of the property, we know it about it, we can go and run the exact rate based on the market, and then we discuss about it, about your options. If you decide, you can lock it that date that you have ratified contract. If not, there's other option called float that you can wait during the process anytime you think is better for you to lock it. We have an amazing benefit in our bank as well. When you lock and during the process, if the rate goes a quarter point lesser, we can rescore it for you, even though you lock it.
Very good. Thank you very much, Mr. Amin. I think for today's sitting, that's all. And we'll come back to you with more questions. And I will encourage you, ladies and gentlemen, please contact us for with more questions. You will find contact details under the video, and keep watching us. This talk will call a Realtor Talk. Once again, thank you very much. Bye bye.